Okay, this is episode number 92. Hey, Johnny Roberts, welcome back to another episode of your podcast. How are you today, sir?
We're doing well. How you doing, Mike?
I am doing great, and I see you brought back to the studio Shelly Cioppa. And so, Shelly, how are you today?
Good.
I'm glad. I'm glad. It's going to be a great time because we are in tax time, and one of the big deals around tax time, Johnny, as you know, are big tax refunds and things, and that's kind of what you and Shelly are going to talk about today, right?
Yeah, Shelly, thanks for coming again. I know you are swamped. This is your favorite time of year, right? I
Yes, it
mean,
is.
it's 8 a.m. to 9 p.m. all day long, every day, so
Yep.
it's crazy time, but we're getting close to the deadline. And one thing, Shelly, I guess that uh, we deal with, I deal with retirees and stuff all the time, and people are surprised about they'll get, oh man, I got to pay a tax bill where they forget to take money out of their Social Security and how all that works and things. And
hmm
the thing is, everybody loves these refunds, but in your opinion, tell me, are the big refunds better? Is it better to have less money withheld and keep the money yourself? What do you see out there? Like, do you
Well,
tell people like, do more, or withhold more, or withhold less, or whatever?
it depends on the individual. If you're not good at saving money and you have um a big bill coming like property taxes or something like that coming due right around tax time, or you need to buy a new car or something, it is worthwhile to punch money into the IRS if you're not good at saving it. So yeah, by all means, have withholding in excess of what you need to cover your tax debt, and then you will get a large refund. But technically, that's just an interest-free loan to the government. Um, so the pros include a lump sum for savings, debt repayment, large purchases, but the cons involve missing out on earning interest or reducing monthly budget strain.
Mm.
So it just depends on whether you're impulsive with spending or
It- you
you
know,
you're
you
a
know,
saver.
You know what came to my mind is when you were explaining that, Shelley, is the old back when I was a kid, my mom would buy things at the store for Christmas, but it was a layaway plan, right? And
Yes,
she would make payments over the year, but at Christmas time she would get whatever it was. That's kind of what you were talking about is if you it's a layaway plan for a bigger purchase or a bigger expense, that's one way to do it. I never really thought about it that way. That's a very intriguing way to do it.
yeah, and this way you can't touch that money until tax time.
Yeah, they're not giving it back.
Right.
Yes. So yeah, I understand, especially for people because I've dealt with that too. People that have a hard time saving, man, they'll blow that money, and then when that property tax or purchase they want to do isn't there. But on the other end of it, because of some of the new deductions and things like that, people are getting maybe more back than they did in the past. So you can still get good amount of money back, but also
Yes,
keep some of the money throughout the year that maybe you haven't done in the past. Is that kind of
that's
accurate?
that's correct. Yes, you can reduce your withholding and still get a decent refund because of tax credits.
Hmm.
So instead of getting like $10,000, maybe you'll get five or four or something like that. But you've been able to use that money to keep pressure off throughout the year, like you said,
Yeah.
paying bills or saving or whatever it may be, and still get that refund that maybe you wouldn't have got in the past because of how the tax laws are, right?
Mm-hmm.
So let me jump in here because this is something I think a lot of people honestly don't understand as much. They think it's a one-time decision in January and I get a tax refund the next year or something. But and tell me I may be off base. But you can actually adjust your withholdings throughout the year. I used to be in on a commission sales job years ago, and I would have some months that I would make lots of commissions, and other months not so much. And my wife would go in and adjust our withholdings to do different things. Is it something? What's your recommendation? Should you set it and forget it on withholdings, or should you manage it, or what? How do people move this thing? How do you manage how much you're going to get back at the end of the year? What does that even? How do you do it?
When you work with an employer at a W-2 payroll job, or hourly job. Um, it's kind of nuisance for you to go into your HR department, monthly and adjust based on what you earned that month. But those jobs, if you're on commission and stuff, I would definitely recommend it. Um, because you would probably be under withholding if you didn't adjust it when you had larger months, because the taxable income is the total of all income throughout the year.
Yes.
So if you under withhold during the larger months, then you're going to probably owe at the end of the year. So in that instance, it would be worthwhile to go in and change your withholding month by month.
Okay.
Or, I know some people who, when they're going to get a big bonus at Christmas time, they go exempt, and then that hurts them at the end of the year. They end up
Yes.
owing taxes.
Yeah. Yeah. And the other aspect that I learned years ago is, so we were married with two small kids, right? So I thought on my form that I had to fill out for HR that it had to be me and my spouse and two kids. And what I learned is that no, you could actually claim more or something. So there are ways to, and that's what I mean. That's why you two do what you two do, because this gets super complex to understand it all, and it's not something you should be adjusting all the time. But you need to understand that there are professionals out here who help you manage the money so it's in your pocket or not, depending on what you're wanting to do. But there are a number of exemptions that you can take, which affects how much money comes to you or goes to the government for that savings program you were talking about. Did I get that right?
Yes, correct.
And the best place to go besides you two is an HR department. But I think before they go to the HR department, they should come to one of you two and talk about, say, here's what I'm thinking, or here's what I'm needing. Get some counsel, because
Yes.
the HR department, I mean, they're just going to kind of hand you forms and they're not going to give you counsel, but you two are counselors when it comes to financial stuff, right?
Right. Yeah, no one at your HR department or payroll department is going to give you any kind of idea what your withholding is going to look like, how to change it.
Yeah.
You're absolutely correct. They're just going to hand you a form and say, whatever you want, we will withhold.
We'll process the paperwork.
One quick thought on this, and tell me if I'm wrong, I'm just thinking from my point of view of someone who's trying to help people save and plan for retirement. But say this year, Shelly, someone gets a $12,000 tax return, and they're kind of set up. They've been a client for years. And they're kind of, that's going on every year, and maybe they're blowing the money, whatever. But could they maybe say, like, okay, let's maybe do a 4 or 5 thousand. Let's adjust things so you're getting 4 or 5 thousand, and maybe we could take that other 7,000 and apply it to a Roth IRA throughout the year or something like that. Start up a Roth and make that money do something for you that's going to really benefit you long term. Is that kind of thought processes you think are smart in certain instances for people?
Yes, definitely. I do have one client who he probably makes about 50,000 a year, which isn't phenomenal, but it's good enough for him. And he doesn't really have the money to make a lump sum payment to start a Roth. So what I had him do last year was over withhold. And when he got his refund this year, he was able to open a Roth. Now he can continue to contribute to it.
That's a great idea. So on those people that are getting them, it's a good way to kickstart it.
Yeah.
And then they could adjust their budget monthly to begin to contribute by adjusting maybe their taxes a little bit now. And the reason I say that is, if once you get it started and you begin to put into it monthly, well, now you're getting interest on the money in April, in May, in June, July, not just when the money gets dumped in every February or March, right?
Exactly.
Yeah.
Exactly.
Okay.
Well, that's fascinating. I've never heard anybody do that, but that makes a ton of sense, because now you've got an investment that's growing, and that's why you need people like Shelly and Johnnie in your life. To say, wow, I never thought I would be able to do this. And Shelly has this amazing idea to go, nope, here's how you do it. Okay. And now Johnnie can help you get the Roth set up properly. So working together, and that's why they kind of work together and bring it to the table so that you can retire at new heights And it's not as difficult as you might think. There are ways and strategies that they have that they can help you apply to your situation. So reach out, go talk to Johnnie. He can connect you with Shelly, but you need to have these conversations because you might be leaving money on the table, and there might be ways to leverage money and through these strategies and things. So, Shelly, come back next week. I got another question, not around this, but around Roth conversions and things of that nature. But you just helped me create another idea for tax conversions and money savings programs. So that's why I love doing this podcast and being here with both of you because you're both just absolutely brilliant at what you do. So thanks for sharing your expertise. We'll see you next week, okay?
All right. Talk to you guys.
Right, see you then.